Hello class, in this video we're going to be reviewing over payable tax and commission. The learning intention of this video is we're going to understand that employees need to pay tax and to be able to calculate tax based on their income. We're also going to be looking at how to calculate income for salespeople based on their commissions. So firstly, looking at calculating payable tax. It's very essential that you understand these three terms before we actually proceed to do any types of calculations. So the word payable tax essentially means the amount of tax or money that you need to pay to the government. It is really important that we pay tax so that the money, that money can therefore be used for hospitals, for education, for roadworks, stuff like that the government needs to spend money on. The word gross income essentially means the salary or how much you actually make before tax has actually been deducted from your account, whereas net income is how much you actually have after tax, after you have been taxed. So what I have over here on this particular slide is what we refer to as a progressive tax system. It's progressive because as you go down the table over here, notice that you're actually paying a lot more tax the more wealthier you are. We can see that there are 6 tax brackets over here, and we can also see that if you earn anywhere between $0 to 18,200, so in the first tax bracket, you don't need to pay anything at all. That's what this word means, nil. You don't have to pay anything at all. But if you earn anywhere other than this amount or other than this tax bracket, then you do need to pay tax. Now, what this description over here essentially is pretty much the equation which tells you how much you need to pay if you're under that particular tax bracket. So for instance, if you are in this particular tax bracket over here, it's required that you pay 19 cents, so that's the rate, 19 cents is the rate for each dollar you made over 18,200. We refer to this amount over here as the threshold. So that's just the limit over here, and we can see that the threshold and the rate differs for each tax bracket. So for instance, this is the rate for this tax bracket, this is the rate for this is the rate for this. I think you get the main idea. However, if you look at the other tax brackets, notice that you actually have a starting fee that you need to pay upfront. So not upfront, but that's the starting fee. And then there's a rate followed with that. So for instance, if you look at the third tax bracket, you need to pay a flat starting fee of 3,572 plus an additional 32.5 cents for each dollar you made over 37 grand. Now, when we do these types of calculations, it's really imperative that you convert all of the rates, which are in cents, into dollars. We need to do this because all the other units in this case are already in the dollar sign, so you need to actually convert this rate, so for instance 19 cents into dollars, which is 0.19. So we're going to look through 2 examples which we've covered in class already. So using the exact 2 examples just so you could actually see how we actually do the calculations. So the first step is we need to find the appropriate tax bracket. So for instance, for $45,000, you're going to be in this tax bracket over here, so the third tax bracket. Second step is you need to calculate the amount that you made over the threshold. So remember, this over here is a threshold, so the last number over here. So you've earned $45,000, so the amount you made over the threshold is therefore going to be 8,000. So we do that by just doing subtraction in this case. The amount that you earned subtracted by the threshold. What we need to do next for the third step is we need to multiply that amount by the rate. In this case, the rate is 32.5 cents. But remember, I said that we need to convert this rate over here into dollars. So this is equivalent to 0.325. So what we're going to do is we're going to multiply 8,000 by 0.325. That's going to give you an answer of $2,600. Finally, what you need to do is you need to add that product, so that amount that you just found, by the base amount. So in this case over here, the base amount is 3,572. So let's add 2,600 with 3,572. So therefore, if you do this, then payable tax, or the tax payable, the amount of tax you need to pay, is therefore going to be $6,172. The question also asks you to calculate what your net salary is. So this is the amount that you need to pay in terms of tax. So therefore, the net salary, how much money you've actually made throughout the year that you're allowed to use and keep, is therefore going to be 45,000 subtracted by the amount of tax you have to pay. Therefore, that's going to be $38,828. The second example is you've earned 96,000. So therefore, you fall under this particular tax bracket over here. First, the second step says you need to calculate the amount you made over the threshold. So the threshold is 80,000 in this case. So we're going to go 96,000 subtract by 80,000. That gives us $16,000. We then multiply 16,000 by the rate. So in this case, it's 37 cents. We convert 37 cents into dollars. So that's going to be 0.37. So 16,000 multiplied by 0.37. That gives you $5,920. Fourth step is we're going to add the product by the base amount. So the base amount for this tax bracket is 17,547. If you add these two values together, the amount of tax you need to pay if you earn 96,000 is $23,467. Now to calculate net salary, all we need to do is simply subtract the amount you earn, so your gross income, with the tax that you pay. So therefore, if you do this, you should get an answer of $72,533. These are some questions I'd like you to do right now. So please pause the video right now so you can attempt the questions, and then after you've done them, please compare your answers with mine. So firstly, for the first example over here, 16,500. Well, this falls under the first tax bracket, and in this tax bracket over here, you don't actually need to pay tax at all. So you don't pay taxes. The answer is how you should answer the first question. Second question is $28,799. So therefore, you fall under this tax bracket over here. So let's firstly calculate how much you've made over the threshold. So the threshold is 18,200. So therefore, if you do this, this will give you an answer of 10,599. What we need to do next is we need to multiply that amount by the rate. The rate is 19 cents. Make sure you convert 19 cents into dollars. So that's 0.19. So if you do this, the amount of tax you need to pay is therefore going to be $2,013.81. So that is the amount of tax you need to pay. Now, to calculate your net income or your net salary, remember, all we need to do is subtract our initial amount that we've made with our tax. So if you do this, you should get an answer of, I'll put $2 signs, which is not really required. That's going to be $26,785.19. For question C, you've earned 42,450, so therefore you belong under this tax bracket over here. What you need to do next is find out how much you made over the threshold. The threshold is 37 grand. So subtract 42,450 with 37. That will give you 5,450. What we need to do next is we need to multiply that amount we just found by the rate, which is 32.5 cents. So remember, convert this into a decimal. So 5,450 multiplied by 0.325. And once you do that, then you add it by the base amount. So I've kind of just done steps 3 and 4 in one single step over here. So as you can see over here, that's where I multiplied it, and this is where I added. So that's why I'm adding using the brackets just to show you, since I don't actually have enough space. So if you do this, you should get an answer of $5,343.25, and therefore to calculate the net salary in this case, just subtract the values together. Your answer should therefore be $37,106.75. Last question over here, if you do the exact same thing, you should get this as your answer. Hopefully you got the answers correct. We're now going to be looking at calculating commission. So only salespeople earn commissions, and what they earn is something we refer to as a retainer. So that's just a fancy word of just saying your income in this case. So a retainer is a fixed amount. So let's say for instance you earn a solid $600 a week. That's your retainer. That's your fixed amount. You will always earn $600 within that week. However, depending on how much sales you've actually generated, you'll also earn commission. So commission, which is extra money on top of that. So a commission is a fee paid to a person who makes a sale. More sales, more commission. And this over here is the formula that calculates how much extra money you're going to make in terms of commission. So that's going to be your commission rate, which is a percentage multiplied by the total sales that you made. This is something you've already copied previously, so make sure you do also refer and use this formula when you're doing your post-test. So we're going to look at this first example over here. So you've got a 5% commission rate, and the total number of sales that Carmen Pina has made is $369. All we do is substitute this into a formula, but remember, a percentage means out of 100. So the way I do this is you have to write 5 out of 100 multiplied by $369. Alternatively, if you've converted 5% into a decimal, that would be 0.05. So you can do any of these two ways over here. I've just showed you two different ways, but I prefer if you did it in using this particular method over here. So 5 over 100 times 369, put this into a calculator, you should get an answer of $18.45. Make sure you round your answers to 2 decimal places always if the question didn't state you otherwise. Example number 2 over here, it's a bit different because it's asking you what is his total pay. So he earns a weekly salary or a retainer of $300 and 6% of commission on his sales. He's made the number of sales he's made is 3,500. So these two formulas are pretty much related because all I've done is I've just substituted this into here. So that's how I've got this particular formula over here. So to find out his total pay, it's going to be 6 over 100 because it's 6% multiplied by the total pay. Then you're adding it by the retainer, his fixed amount, which is $300. Therefore, he's going to get a net pay of $510 for that week. All right, so please pause the video right now so you can actually answer the following questions by yourself. So the question reads, Mike makes a commission of 10% on each TV set sold at store. Each TV costs $120. How much money will he make as commission if store sells 25 TV sets? So you're just trying to calculate the commission based on selling 25 TVs. So commission is commission rate multiplied by total sales. In this case, the total number he sold 25 TVs, each TV worth $120. So therefore, the total sales will be the product of these two numbers. So total sales will therefore be equal to $3,000. Once we can do this, we can therefore substitute the values into our formula. Commission is 10%, so 10 out of 100 multiplied by 3,000. Therefore, your answer is going to be $300. Question 2. Alexandra, a car dealer, earns 40% commission of her luxury vehicle sales. Last year, her sales were $480,000. What was the total dollar amount of her commission last year? So again, trying to find out what is the commission made. So commission is this particular formula over here. The commission rate is 40%, so 40 over 100 multiplied the total sales. In this case, so therefore, you should get an answer of $192,000. Question 3. John is a real estate agent on a retainer of $1,500 per month plus a commission of 3% on the property sold by him. Last month, it should read, or should say, John sold 3 properties worth $550,000, $600,000, and $720,000. How much did he earn in total for that month? So it wants you to find out the commission and then add it by his retainer. So it's therefore commission plus salary. So let's firstly calculate how much commission he's actually made, or in this case over here. So the total sales that he's made in total is therefore going to be $1,820,000. So you just add up these 3 house prices over here. Once we've figured out what the total sales with it, we can then figure out how much commission he's going to make. So find out it's going to be 3% of that amount over there. And then once you find the commission, then you can add it by the retainer. So he's made a commission of $54,600. You're going to be adding this amount by the flat fee he earns. So if you do this, it's going to be $56,100. Question 4 over here reads, Jesse sells advertising pages for a magazine. He's paid 13.5% commission for each page he sells. A page sells for $13.50. He sold an average of 24 pages a month. What was his commission for the entire year? Okay, so it reads out he sold 24 pages a month. There are 12 months in the year. So first of all, let's figure out how much, or on average, what is his total sales for the year. So that is the formula over here. To find out the total sales of the year, you're going to be multiplying 24 by 12 because there's 12 months in a year, and you're multiplying that by the price of each page. So if you do this, you're going to get an answer of $3,888. Once you do that, then you can actually figure out what his commission is going to be. So commission is, remember, commission rate multiplied by sales. So 13.5 over 100 multiplied by 3,000, that should be 8 over here. And if you do this, you should get an answer of $524.88. That's pretty much the end of the video over here. Thank you for watching the video. Leave a thumbs up if you enjoyed it. See you next time.